The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Friday. And, wow, volatility is here and might be here to stay. And we're looking at crude oil right now. I think we've got Eddie on the phone with us here today from the very beginning. Eddie, are you there?
Good morning. I'm here.
Oh, good to hear you. Good to hear you. I know you're having good weather, so I'm not even going to ask you about what's going on in southern Spain over there. It's still cold here.
So the change is windy and very, very windy and cloudy. No rain, but yeah.
Okay. Hey, listen, we've been up all night talking about the currencies and the crude oil. I got crude oil up right now. We're going to go ahead and start the day, talking about some generics, and then we're going to move into some stocks that are in earnings season here. But I've got crude oil up, and we had some super volatility the last 2 days. Today we're kind of hanging below this 47.72, which we talked about was that all important. And where do you think this thing's headed from here? Because this is kind of dictating. The market got a little happy with crude oil bouncing a little bit. We talked about, you and I did actually, it would just be almost beneficial to the market if this thing just almost it didn't have to rally, but it just stopped going down. Where do you think this thing's headed now, which would actually give some market relevance here?
If you look on the charts, if you look on our charts of TAS market profiles, if you look at the profiles and count, just squeeze a chart, if you count how many profiles has not been even touched or attempted to break above profile highs. That means above supply area. So if you squeeze your chart a little bit and count profiles, so you see that you said the last week that maybe the due for the one profile at least to break in. Yeah, take a look. Since September, right? Since September, John. Since September, not a single profile high level, that means supply, unfair high, has been even penetrated. That means, it's a due time for this profile, which is 50-30 and 40-70. 50-30 and 40-70 of this profile will build the base for the crude, like building so-called bottom or finding some neutral market stance or market rotational behavior. That means, I would say this is a neutral. You can trade, not to pick a bottom for the long-term reversal, but the opportunity to trade shorter-term profiles, 60 minutes to 40, and try to find your place in there. If you put like 60-minute profiles, you'll find that very useful. Would be for the player. My opinion is market is neutral, finding the bottom, forming the bottom, and our profile will allow that to see whether short-term resistance is 47.70 short-term resistance for the intraday resistance, and then if it breaks, we need to go into the 49.50 and then to the 50.30.
All right, so putting a gun to your head on the crude oil stance, you think we're going to be a little bit in a rotational situation right now, even though we're still trading below profiles? And we kind of satisfied, as we kind of look at these profiles, this is the daily chart, by the way, on crude oil, and the weekly's just looking still. Let me just pull up the weekly. Yeah, it's just looking still just ugly as I don't know what. But,
don't show the weekly to anybody. If you don't want to get a heart attack, don't show a weekly to anybody. It's like, right. It's like I don't know how to do that.
It's really weird when you step back from crude oil. We talked about this in the last 3 days, or let's just call it this week. We've had, we've had a 50. I guess we could say it's a 15% volatility range in the world's energy supply in 1 week. and 15% of the value of the instrument volatility range in 1 week. I mean, it's that in itself usually, like, I know what you're saying about, this may be kind of forming a bottom down here. That's, that kind of really tells the story a little bit as far as trying to form a bottom. We've got some volatility here. There's obviously some positions changing hands, but the fact of the matter is, as we talked about, I mean, the inflection points to pay attention to still are on the daily 47.72 and 50.39 up there. So I guess what you're saying is if we can get back above 47.72 only, we can start trying to pick some longs here, especially a close above there, as we had on Wednesday. And then we had that kind of march up north there. Trading on the shorter term time frames, we've got, the ability to get back above these 240s, which have regulated this trade down very well. But Eddie's saying that above 47.72, it might be okay to be long and start nibbling again. Let's take a look at the XLE, which is relative to this. And here's the weekly on the XLE. And I had done a free video, Eddie, as you know, about trying to use this as a relative strength trade versus crude oil around 74.18. And we got a little bit of a bounce off of there, but then everything kind of gave up as crude oil got really volatile, and a lot of the stocks that are in the the oil business, so to speak, that comprise the XLE have now started trading below the 74.18. And the cool thing is, we never even talked like that until recently, because it kind of showed its hand, from a relative strength type trade versus crude oil in general. But now all bets are off on this. We talked about placing stops oriented around that 74.18, just as, it's a relatively painless stop out, actually. And waiting patiently for those things to happen is always a good idea in my mind. But taking your medicine on things like that, keeping the stops in force, and there's not a lot of reasons, like Eddie was referring to the daily profiles and getting back into the balanced area and possibly closing above that 50.39 area. That's where you're going to start having some technical damage for the shorts to possibly take advantage of. And right now in the XLE, based on that same premise, you really don't have a lot of reasons yet. I mean, people are going to, some guy out there is going to buy the low print, but playing that game is very dangerous, as you know, Eddie. And getting some confirmations back above 74.18 on the XLE will give you some reasons to start picking battles on the long side. But, as Tom was saying the other day, I was listening to him. I mean, oil doesn't have to go back to the $60-$70 range. This thing could just languish down here for years. I mean, it doesn't. So building up a big position, dollar cost averaging, in my opinion on this right now, may not be the way to go. You know what I mean?
I would say looking at the chart on weekly, especially on weekly, there is a piece of information that we're getting from the profiles, the shape of profiles, how they look like. Weekly profile was in the middle of December, when it was 4 weeks ago, when it was fired or placed new profile. It was extremely wide. What that suggests a continuation of the volatility, and until new narrower profile comes in. How we can apply that information to our favor? There is a options on Excel probably there, so we need to sell premium at this point, because it's a market at this point is at the stage of the highest volatility. So
right.
Buying options is not a good idea. Selling options, that's what the good idea is. And if you have any idea about options, for those who understand, they might find some place how to utilize.
So what would be a good option strategy for something like that? After you said that, like, people are going, well, how do I take advantage of what you just said? What would be a good option strategy to really, if you were trying to brace yourself for a rally, what would you do?
Some easy strategies are, of course, trend is obviously down, right? So it's no brainer right here. Trend is down. Right. So sell calls. So calls say what our strike price 79.19 is the point of control, and 82 strike price and 79 price 79 strike price, that would be the safe. Or we can short the market and go in the money puts with a lots of premium in it. That means you're locking in your trade. And locking in the volatility. We done that last time with the oil. We shorted the oil and we shorted the puts, and we bought the oil vice versa after that, and we bought the calls with the 2 points of actually weak or extra premium, so-called. So there are some safe strategies, of course. Or you can sort of strangle it, like going 89 leaps, like 3 months, 84 calls to the 70 puts. So it's called a short strangle. Short, why short? Because both puts and calls are short. They are shorted. And you're strangling market, like giving the corridor, if market will not go above 82 and not below 70. However, you can use a premium received. I did not quote it, actually. Premium, your break even would be your premium received above 82 and your premium received below 70. So it's a pretty safe play, say in the range of the 7% of the market moves. We done that recently for E-minis because volatility is high as well.
Right, for folks out there, the strategies that Eddie's talking about is something that will have to be monitored, because you're actually kind of selling premium, and you're trading a future against it, and that's just a kind of a premium capture volatility play. And it's difficult, to not monitor that with the volatility of crude. You're going to have to stay on top of a trade like that. But to possibly put something on that's kind of, almost not unmonitorable, but something that's hedged, that's got some degrees of hedge to it. But if we're looking to, let's just say folks out there are trying to buy crude oil, would it be prudent to, possibly buy the future and maybe buy some, if you're buying a hedge against that future, if you're trying to create a hedge against that long future in crude oil, what Eddie's saying is basically to try to buy the puts right now as a hedge against that long play. You're buying massive volatility, and that may not actually produce, it may actually lose money if crude oil rallies, because you're paying so much for the vol. So when we come back,
that's correct, John. That's correct.
Right.
And listeners, I might say that that probably will be counterproductive, because crude or XLE options are at this point implied volatility. They call that IV. It's at 48%. It's a big one. It's a lot.
Okay. All right, we're gonna go to our first break, and we're gonna come back in just a little bit, folks, and get into some currencies and broad markets, because the S&Ps are breaking down here, and we've got our breadth negative, and today's Friday. We may have a weekly close below some very, very important levels, and a breadth close, which is super, super important. So we'll be right back, folks.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I've got Edmundus Catinas from Spain, my partner over there, with us today. And Eddie, I've got we're going to get into gold in a second, and we're actually going to talk a little bit about some currencies after that. But just showing our scanner, this weekly breadth that this is a super mega powerful indicator. In our opinion, we've done the back testing back to 2003 as far as we can go on this. And these weekly crossovers are just incredible at basically giving you the tide of the market, as Basil actually said the other day. It was a good way to coin this. The tide of the marketplace, the internals as it's relative to different indices. We're actually putting 5 more breadth indices in this weekend, so that'll give a heads up on that. We actually created, and I just want to show you guys this before me and Eddie get into this. We have created, and this was very painful to do this, paragraph talks relative to what's going on with different breadth combinations and different stock combinations relative to breadth and boxes. So in the scanner, I would say probably about Tuesday, if you guys have a subscription to the scanner, if you're looking to get one, it's actually going to give you a play-by-play relative. As you mouse over the instrument, it's going to give you a play-by-play and a dissertation of what's going on with that particular instrument and how that's related to the breadth. If you're looking at a high beta stock, you can always kind of lean on that. But, one of the biggest complaints we get, Eddie, is, man, this information's great, but, I can't use it like you guys. Well, hopefully now that'll be cleared up, and you kind of get an automated dissertation as we would actually explain it in person, hopefully. So all right, Eddie, you still there?
Yeah, good morning again, everybody. Yeah, I'm here, John.
Great. I've got gold up right now. We talked about this. I don't want to beat a dead horse. You and I were like, man, you just got to buy breakouts above 1,200, and you can't look at gold from the short side, even though the dollar continues to just ramp up. It's almost, it's almost like the 10-year situation, in my opinion. Market goes up, 10-year goes sideways. Market goes down, 10-year goes straight up. Dollar goes up, gold goes sideways. Or up in this case. And if dollar ever pulls back, gold may ramp up. But you've also got some fear plays in here at this stage now, and we're back. But we met the targets 1250. Now it looks like we're going to close, especially on a weekly basis, above 1250. Don't have any new boxes appearing, on the daily, and definitely not on the weekly. So again, we're not seeing, some guys were asking about this, we're not seeing any type of resting stage here that may appear anytime soon, and no new supply, so to speak, trying to appear here. And Eddie, what's your thoughts on gold?
My thoughts are that I'm kind of, beating myself up. And we talked a couple of days ago, and
Right.
we were watching, but I was a little bit shy to pull the trigger on the long side because I don't like buy highs. And it was not actually highs. It was 1228. It had a dip, and we talked about, you and I, at 1228, and here we go at 240. You see that at 240, 1228 another day? It was
Right.
sitting there at the bottom of the box on the previous profile high, above previous profile highs, and the live profile lows at the 1228. Well, what happened? Yes, gold is a very good long play and all time levels, no scales, and just a very strong and powerful play right now. I don't know fundamentals behind it. It's probably related to the war, or related to the oil, or related to the economical situation. I think, Greece, Europe, and that's alternative. Yeah, and this is a definitely good long play. We just need to find another points of reflection.
There's some thoughts that I have on why gold's going up fundamentally that are kind of currency related, not a conspiracy theory, but I want to get into that in a little bit after this next break. But I hear we have John from Philadelphia on. John, are you there?
John, I am. Thank you for taking the call. Thank you for having these informative conversations with Eddie. We appreciate that.
Great. Ooh, is that your background noise? Okay, now it's over. You still there?
I am, and it's clear on my end, John.
Okay, great. It's clear again for us. I was listening to some of the things you were saying about FXCM. I mean, do you have any deeper information on that? Because, I was, thinking that was almost unavoidable about some big currency shops having some major capitalization issues. But can you hang around, because we got a break now, and I'd like to get into that right when we get back, if you can hang around.
I will hold. Thank you.
Great.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I've got Edmundus Gatinas on with us from Spain, my partner over there, and I've also actually got John from Philadelphia. Are you still on, John? Hello, John, you still there?
Still here.
Okay, great. I don't know if you can see the chart on FXCM on the screen there.
Yes, I can.
Yeah, this is our 240-minute chart just to show intraday kind of what's going on here. You had sent something in, and I've got some friends at FXCM in Hong Kong. What is the story on this?
John, what the story is this: massive losses, both at client accounts and proprietary trading accounts in a great many financial institutions all over the planet as a result of the revaluation of the Swiss franc by the Swiss National Bank. That is the story. Mm-hmm. Of course, you're looking at this. This is obviously much more important than merely the price action of a common stock with the ticker symbol FXCM. This gets to the integrity of the brokerage system or brokerages that you might be involved with. Hence, it is very critical, very important to do what you can to at least be knowledgeable as to who is under financial stress and who is not.
I agree with you. Who knows? A lot of companies probably haven't disclosed, the risks that they had yet in the Swiss. You know what I mean? I mean, like I mean, if they're a publicly traded company, they're obligated at some point to do that. But who knows what other skeletons are in the closet laying around from this thing? I mean,
yes, John. The thing I will tell you, I became very well trained at doing the following back in 2007, 8, and 9. During these periods of financial stress, I make sure I have a quote page of about 25 different institutions, financial institutions who have, publicly traded equities. The reason being, the people who own the stock, be it institutional investors, or be it insiders, or be it the big trading desks at the big too big to fail institutions, these people are the first to get a glimpse of financial losses, and that glimpse gets instantaneously transmitted into the price action of the equities. Right. And as a consequence, I track these. And I'll give you just for example, during this particular time frame, looking at the common stock performance of, say, J.P. Morgan, Citigroup, Bank of America, Wells Fargo,
right,
Bank of New York Mellon, a critical one, ticker symbol BK, State Street Research, STT, Deutsche Bank DB, Credit Suisse CS,
gotcha.
And then very importantly, the two exchange equities, ICE, ICE, and Chicago Merck, CME, because those have the clearing operations, and when losses occur, it's the clearing houses that are first to take losses, and that will be reflected in the price action of those stocks. So I just advise all your listeners to stay on top of these, and the beautiful thing about Tom O'Brien's Tiger's Den, it's a fabulous forum where like-minded individuals and traders can communicate, leading clues of potential financial stress.
Well, John, I appreciate that, and I think the listeners should really take that to heart and take it at face value, because, Eddie's going to laugh about this. When I say this, he doesn't even know about it. I hope he laughs about it instead of cries. But back when we were dealing with MF Global, Eddie, like years ago, I don't know if you remember that, we got paid on a regular basis by MF Global for supplying systems to their traders and brokers and things like that. I found a couple of checks that MF Global had written us, Eddie, that I stupidly didn't cash like on a timely basis, and those were just completely worthless.
That's a great story, John. It's I chuckle.
Hey, John, it's not a great story to me.
Yeah, I know that. I figured.
It's like, John, thanks a lot.
I would, John, and Eddie, I would merely state
listening or thousands. Thanks a lot, man. That's a good show here.
Go ahead, John. Go ahead.
I would merely state to your listening audience that what you just described, you and Eddie both, you make light of it, but that idea is critical, and it really pays from the perspective of insurance purposes to stay in touch and not assume things will be okay. Always be looking.
Correct. And I think some of the things you just said, which was very insightful about the JP Morgans of the world, the CMEs of the world. I got CME up right now. The fallout from just that one event really hasn't probably hit the grid yet totally when it comes to some of these stocks. And we've been talking about the financials with the note bond situation not really going as they expected it. Now you've got, really, we've enabled, I've talked about this a couple of times, we've enabled these other countries to kind of, it's okay for them. Like, we've manipulated our markets. There's no doubt about that. However way you want to put that. And we've enabled other countries and other central banks to say, oh, okay, yeah, we can do the same thing. It probably helped us to do that. But in the end, who knows?
John, let's talk politics here. Let's talk politics if you want. Every country manipulates their currency and their interest rates. Everybody. It's not actually manipulation, it's so-called control of the economy, right? You ease up, economy goes, you tie it up, economy slows down, you ease up, and economy goes higher, right? So it's normal behavior.
I think we put it on war. I think we've put it on an exponential path more than it was before with some of the things that we've done to so-called fix things. But now where does this thing ultimately head? I was thinking about it last night as I couldn't sleep thinking about this. John, I hope you're still on listening to this. Maybe you have some comments too. As these things, as countries and central banks now try to rig it based on the other country rigging theirs, and this kind of race to fix things, ultimately, where does this end in the currency situation? It probably ends up more lending credence to a global currency type situation because everybody keeps rigging. There's really no faith in the system at all, and therefore, ultimately, and I'm not into the conspiracy theory stuff when I say this, it almost is default thinking to me that it ultimately ends up being everything's on par, because that's the only way this ends up stopping, really. And there's going to be a lot of volatility and carnage, just like this Swiss franc situation and FXCM as a fallout piece from that, until that probably comes to roost. But that's my opinion. One could be the fool, John. One could be the fool if that markets are internally perplexed and externally perplexed and connected. If you think Swiss and euro and dollar chart just like 30% drawdown and 15% of the settle up yesterday will be only a lone single chart like this in the world? No way. You're gonna have lots of connected issues with this. Many, which is repricing of the currencies, which is losses as FXCM did occur. They probably got a naked on some other side. There'll be massive sum of currencies right there, and some of them will win, of course, benefit out of it, but most likely, like history shows, probably will be the losers. But yes, definitely there will be lots of opportunities and volatility in the market. If you think that this chart is alone, think again. This other massive so-called fixes could happen after this, right, John?
John, yes, indeed. Let me just close with the following idea to share with you and your listeners. The purpose of my call here is not to discuss trade ideas, market direction,
right?
To alert your audience to the imperative need to stay finally in touch with whom you are dealing financial institution-wise. Let me just go back to the Swiss franc action.
Sure.
One thing we know absolutely. 2 weeks ago, the head of the Swiss National Bank came out and said, we are definitely, no questions whatsoever, behind maintaining the peg of euro at 120 to the Swiss franc. That was 2 weeks ago. Fact of the matter is, the Swiss, in their action yesterday, frankly had no choice but to do what they did. The idea being the finances of the sovereign system in Europe are deteriorating sufficiently that the Swiss central bank would have had to literally spend unlimited Swiss francs created out of thin air to buy euros to maintain that peg. And it was just a matter of time when that would have to break. And it makes sense to me that the Swiss National Bank did this ahead of three things. One, the ECB meeting next week, the Davos meeting in Switzerland next week, and the Fed meeting coming thereafter. So they did what they frankly needed to do, and of course there are massive losses as a result. But I will just point out, when you look at the sovereign debt and corporate debt markets globally, what we are seeing, of course, is prices going up and yields going to zero, if not negative. And just think about the implications of many market participants. Let's say you're an insurance company. I don't know, pick Travelers just as an example, or Chubb. These these big companies with their institutional investing arms have the need to buy debts or buy bonds merely to make investments in hopes of earning a return down the road to supplement, premium income to pay claims. When yields go negative, that whole business essentially starts to fail. I mean, the concept.
You're right.
And the implications can be profound and totally unexpected. And frankly, I don't have any way to guess what those will be. But what I can tell you, all these developments are such that it is absolutely, once again, imperative that all us investors, be it individuals or institutional types, have to pay very close attention to the financial intermediaries with which we're dealing, and always ask the question: is there a skeleton here that is in the closet, or is there a time bomb ready to go off? And do our best. And that's about all we can do, but we just need to do that.
Wow, thanks for that comment. I gleaned three things out of what you just said. The first one is the guys who are on the Swiss Central Bank probably need to get extra security right now. Personal security.
By the way, there's that security firm based in London. What's it called? G4. And then of course there's the old Blackwater. Rest assured,
exactly.
Those individuals have that security. Rest assured.
That's the first thing. Yeah, exactly. That's the first thing I thought about. The next one is just like the QE pulling the bid on the treasuries, with the Swiss pulling the bid on the euro. Fundamentally speaking, that may drive this thing to par with the dollar. You know what I mean? Just by what you just said. The other thing is, I guess the bigger picture is all of this, once the individual investor in the U.S. starts trying to digest all this and what the risk actually is, this is the type of thing where people just want to sit on the sidelines, and that may not bode well for in cahoots with what we're seeing technically on the charts on the S&P and the breadth changing and the levels being breached. This is probably not the time to start stepping in large on the stock market as we see some technical damage. What's your thoughts there?
Frankly, I'm going to guard against being paralyzed in assessing the risks in my financial institutions. And actually, when it comes to actually trading, I'm going to take the opposite approach. As long as I've convinced myself, John, that my financial intermediary, my broker, is sound and has got limited risk, I'll do my best.
Oh, no. I'm sorry. I wasn't speaking about putting money in. It's holding money in institutions. I'm talking about the individual investor, as I see it, may not like this type of environment.
No. I agree with I agree with your guess that participation will go down, but as that impacts trading, what that leads to, less liquidity, more volatility for you and I and our audience. There's more opportunity, so it's actually something we can actually participate and benefit from.
Well, John, we're going to another break. I really appreciate the call. This has been great, insightful information, and Eddie and I will stay on, but I really appreciate it.
Thanks for your time, John.
Yep, you're welcome. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. Still got Eddie on the phone with us here, and just insightful information from John out of Philadelphia. I really enjoyed that call. You guys feel free to call in. Those type of discussions I think everyone could benefit from, and some of the things that John talked about are just invaluable in my opinion, just to kind of keep on the radar screen. Eddie, you still there with us?
Good morning, everybody. Again, yes, I'm here, John.
Okay, great. Got a couple minutes left, and some folk. We didn't go through our normal kind of course of action today, guys. I apologize for that. Given technicals on quite a few instruments, that gets to be a little rote and boring sometimes, and we switched it up a little bit today. But again, we're going to kind of sum up everything with the S&Ps here. That's on everybody's radar screen. We've reached a low this week, i.e. last night, of 1970.25. I'm going to call that satisfied, hitting the targets down below 1968 that we talked about as we were looking at this 2027 area. I got chopped up a little bit there. If you've watched the show, you know that this has been a volatile situation, but we went back and retested that with the dailies negative yesterday on the breadth. And what do I mean by that? Get the scanner, you'll find out. We've got some dissertation going in there. But we reached a high yesterday of 2027. So hoping that we rally back up with the breadth negative on the daily gave us a major inflection point. We talked about targets down below of 94 and then 68. That close below 94 allowed us yesterday to start looking at this as the next leg down is 68. So now we've met 68, and now what do? We got 1984.50 as the time of this report. This is real-time data that I'm talking about. Eddie, I'm going to let you take it from here because you know that, we've got this Brett situation kind of hovering, and we got to have a weekly close to really confirm this. But what are your thoughts here?
I happened to be speaking on your show yesterday about, and you asked me about S&P, and we said that the market was at that time at 2000, even 2003, 2005, and we said the line in the sand is our Brett indicator, weekly Brett indicator, that it's turning negative. All others time frames, daily, 240 and 60 minutes, they were negative already, and that we've been watching. Seems like week is closing to that note, but giving the ATR average true range, I'm just going to be technical a little bit, so the wider volatility, I would not expect market like diving tomorrow because of Brett is negative. But definitely we will be looking to sell rallies at this point and be watching in the day. Yes.
That's the main point. I'm glad you said that. That's the key text that Eddie just said is if, right now we're still, 1994.70 now is the selling point, the resistance area, so to speak, to be sold. Remember, close below. We had some targets there. 68's been met. Now we've got a range between 68 and 95, in my opinion. And again, we're not always going to be right. You can orient stops around that 94, 95 area on the short side. But I hope's a bad thing, remember that. But I hope we can get up into this 95 area for a possible high probability setup on the short side. And it would be really, really cool if the breadth closes negative, and then we're going to have that crossover validated, and then we can look to some lower prices here on the stock market. And I think the fundamental news out there in general, Eddie, it ain't that good. It's unsettling. Even to me, it's unsettling. And I've kind of been a long proponent buying the dips based on our weekly breadths for a while, except in certain conditions. But that's the story, folks. Eddie, thanks for coming on today. We got to head off here, and Steve Rhodes is going to be next. Thanks very much, Eddie.
My pleasure. Thanks for having me.
Okay. Steve Rhodes is next, and you guys have a good trade day and a good weekend. But just remember those numbers on the S&P. It might be something to think about.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.